Welcome to Banker on Call with our friends at Shield Compliance. I am Jay Rosenthal. That is Tony Repanich. Tony, thank you for making time for this Banker on Call. And I don't know how to say this. We're actually calling on our audience to respond, sort of a call and response for today. But we want to talk about the operator survey. But first, what's been going on in your world? What are bankers talking about as it relates to the cannabis and probably the hemp industry as well?
Yeah, I think like everybody else, we've been kind of anticipating what might come out of the hearings that happened in July. And we're somewhat positive about the way the administration at least approached those hearings after only selecting people that were sort of anti-cannabis. They ended up being the sort of let's get things done group within that testimony. You guys did a great job covering that. Thank you for keeping us all informed. So we're anxiously awaiting the outcome of those hearings. And then, of course, we're following what's going on in hemp. And it seems like just when you think nothing's going to happen, something happens. And so I don't know. It's becoming almost a shoulder shrug, a little bit of like, oh, okay, let's see what happens when Congress gets back together.
Right. And then as going into fall, there's going to be a lot of activity, I guess is the answer. There's going to be certainly activity on hemp. There's going to be something on rescheduling. There's already rescheduling of medical. And we'll see how that affects operators, and financials are this week, quarterly financials from publicly traded companies. Probably too soon to tell how it impacts them, but they're certainly talking about it. We already know that from some of the calls that we've been on and monitoring. But what I want to talk to you about is over the past couple of weeks, we've been reaching out to our audience to complete Shield Compliance Operator Survey about their banking relationships, how they're going, what they'd like to see. Talk a little bit about, I guess, the sort of why behind that, because you've done this over a number of years. What do you hope to gain from that for an operator survey, sort of seeing what the industry is talking about?
Yeah, this really goes back to my days as a banker and really wanting to understand what moved commercial customers to stay with us as a bank, or to get our non-customer prospects to choose us. And so better understanding within this cannabis industry space how those operators are thinking about the relationship with their financial institution, really helping us understand what might cause them to move financial institutions, and where those pain points are that our bankers can potentially solve for to enhance the relationships that they already have. And so over the years, we've gained insights about which compliance requirements may be overly complicated, and it gave our bankers a chance to sit back and look at those and say, how can we still be compliant, but maybe make those easier or clearer for our customers? And then just understanding, how are the customers feeling about the fees that the bankers charge? And then what are the demands for products and services that aren't yet being met, or that these businesses are anticipating that they're going to need in the future? And so helps our bankers plan as they move from a very narrow set of products they've been willing to offer in the early days of cannabis banking to a more rich and full relationship with these businesses.
Yeah, I want to first, there's a link to how to fill out the survey, linked to the show notes on this episode of Banker on Call. But I want to ask you, having done this over a number of years, both from seeing what the operators are saying and sort of seeing how financial institutions respond, has the relationship evolved, both from an operator perspective, like they have, now longer term relationships, ideally with bankers, financial institutions, but also the financial institutions are more used to dealing with the cannabis industry. Has the feedback changed over time, and how, if you've seen that?
Yeah, I think one of the things that we've taken away from the survey is that many operators have a really sort of deep and personal relationship with the bankers that have stepped into the space and decided to serve the industry. And there's a lot of loyalty there and appreciation for the work that's been done by those bankers. At the same time, I think our bankers, it's reassuring to hear that the work that they're doing is valued. And so it motivates them to try to do more. How we've seen that evolve is our bankers are continuing to look at how do we extend credit in an industry where, we've talked about it in the past. The financial condition of the industry is oftentimes largely driven by how licensing is done in an individual state. That deeply impacts the economics for licensed operators. Taxation's been a huge issue that we've talked about in the past. And so, and these are in many cases startup businesses, which is not typically where commercial bankers begin a lending relationship. And so it still has challenged our bankers to think about, well, how and where can we extend credit and add value for these customers? I think the other thing we've seen is just an expansion of treasury services. So understanding that this isn't an all cash business anymore, that these are complex businesses that need to pay multiple parties, need to be efficient in how they manage these processes. And so extending those services that they might have previously reserved for other commercial customers, extending those to these customers.
Yeah. And at least from the industry's perspective, or from the operator perspective, let's say, there's, I don't know if it's like a rainbow, like there's something at the end of the rainbow, right? You think about rescheduling and you think about safer banking, which is being reconsidered for the 100th time in Congress. And I always feel like the industry or operators feel like there's something on the horizon that things are going to get magically better when something happens. Rescheduling happens magically better. Safer banking happens magically better. But if we've talked about before, a lot of where the regulations come in for banks who bank cannabis is not done on those two levels, but sort of on a more sort of what regulates financial institutions. Like how are you thinking about, how are bankers thinking about it when you talked about rescheduling, you talked about safer banking? Like, how do you make those changes if these things happen? Like, how quick can the relationship between a bank and a or financial institution and an operator change, and what may change first, second, third?
Well, I think the 280E impact for businesses is important. As we've talked about with our tax experts in the past, a lot of businesses have had complicated strategies in place to try to minimize the impact of 280E, but it's still impactful on the industry. And so anytime you can free up cash flow, that makes a commercial business that much better of a borrower for the banker. And so I think bankers are going to be able to react pretty quickly to that, especially if we see that the rescheduling is extended to adult use and not limited only to medical. Although we've already seen some of the more complex companies already start to think about how to divide those businesses into two separate businesses to keep the 280E deduction if it is only with medical. But I think for bankers, that change in cash flow will be something they can react to relatively quickly. I think on the safer banking side, and even with rescheduling, then it's really looking to the administration to do the administrative work of providing guidance. So, what I'm looking for then is, hey, do we see USDA or SBA loan guarantees being extended to these businesses? Again, that will pull bankers into the lending conversation faster when they can share that credit risk with another party, in this case, the federal government. Those are meaningful loan guarantee programs. And then will FinCEN start to reduce some of the compliance requirements that bankers face today, like mandatory suspicious activity reporting, that is very time consuming, very labor intensive. And if they can reduce some of that, they may be able to share some of those cost savings with licensed operators. But we know there's still a lot of concern about the cost of banking services. Even though that's come down over time, operators would love to see those costs come down even more. And so I think bankers are looking for the regulatory state to provide guidance that would help to reduce the actual cost of offering services. And so I think the follow-up to all of those, to your question, is then how quickly does the administrative state react to what's happened at a legislative level?
Right. And that's a big question mark. I mean, I think that's one of the big question marks, and made more complicated that those decisions are made in Washington in the midst of other important decisions and other regulatory considerations, both about the industry and about other things as well. And I think you may have mentioned it in previous sort of conversations like this. Like it's not immediate, and the most immediate might be 280E, which does have cascading effects with relationships between operators and financial institutions, in that there's more free cash flow.
Absolutely. I think the other thing that our bankers are looking for is, what does this mean for operators who are in the business today? Is this an exit point for them? Is this a point of consolidation? And thinking about how do they align themselves with the winners in this next stage of the industry? Because these changes in the industry will kick off a round of consolidation, realignment of capital. And our bankers, of course, want to be tied to those businesses that have the highest chance of success and will be around for a long time.
Yeah. There's been, even since the beginning of the year, I think many predicted that it was going to be a year of M&A. And there has been some, and certainly some of the larger ones are taking advantage of I don't know, distressed assets, but of assets and the capital that they have. But I do think there are some inflection points coming up, as we talked about, that may even kick it into higher gear towards the end of the year, depending what happens with the rescheduling hearing, depending what happens in Congress, depending what happens with even sort of with hemp regulations. I mean, it's sort of like, I don't know if it's 4-dimensional chess, but it really, there's so much going on from an industry perspective that any additional insight from operators to financial institutions is certainly helpful to prepare for this eventuality, which is why in the show notes, go take the survey, because it helps Tony, it helps Shield Compliance, it helps financial institutions understand what the industry is going through, which is always helpful, I think.
Absolutely. And I mean, as licensed operators, as customers of these financial institutions, your voice matters. And so this is your opportunity to share with your current banker, who's probably a recipient of the survey, but also bankers that may be interested in your business, what drives you, what motivates you, and what your needs are now and into the future. And so we really do want to hear from you. We also ask a lot of questions on the survey about how you move money. We think that's really an important part of what's constrained the industry, whether that's payments at the retail level or even how you're managing your wholesale payments, leveraging that information to help our bankers make better decisions about where we can open up products and services. And obviously, over time, there will be more discussions with the card brands as these legislative and administrative changes continue to unfold.
Yeah. Do you want to, do you have a prediction about that? Come on. No.
You know, I think we know for sure, and Fiserv has been very upfront about this, that they have said they're willing to leverage their debit networks and encourage other people to participate, other local, or I should say regional debit networks to participate. However, I think Visa and Mastercard are still kind of trying to figure out where things go, and they want to see as much guidance as possible. So I think there's pressure on the card brands to do more, especially in medical markets now that we've had rescheduling. But it's going to be a slow process.
Yeah.
I think the good news is, I would add, Jay, the one thing that I think is really positive is, in the meantime, the cannabis industry continues to be an incubator for alternative payments and finding out which ones consumers are willing to use. And I think over time, you'll see that some of those will prevail even when cards become available, because the cost of those payments is better than the card brands. And so there's been a little bit of a benefit to the industry being shut out of participating with Visa, MasterCard, for example, and that a lot of innovation has happened, and consumers and merchants have both been trying to figure out ways to get away from cash.
Yeah. It's sort of an incubator in understanding consumer behavior outside of credit cards, I guess. I mean, that's
right.
I mean, it really is. And there have been, I mean, from ACH to even to in-store ATMs to whatever the situation is, like, it has forced some really creative thinking around how consumers can pay, right, in retail.
Absolutely. And so we're working on some exciting projects right now that will roll out this fall that I'm look forward to coming back to a future banker on call and sharing more on those as we get closer to going live with those. But I think there's some exciting things there. And so the survey gives operators a chance to share what's working for them and what they're using today as we continue to innovate in this space. Yeah.
One of the things that is interesting and has happened, it's quasi-related in that for a long time, certainly US-based cannabis companies were shut out of the New York Stock Exchange. And actually, since probably last we spoke, there's now two. Now they're medical operators. They've bifurcated their business. But it seems to me that it is an interesting inflection point or something new that didn't exist before, where with rescheduling of medical cannabis, there are now other institutions saying, oh, this is now Schedule 3 as opposed to Schedule 1. We can treat them differently with guarantees. Like, I don't mean to ask you if it surprised you, but like, did that surprise you how quickly actually that happened with Trulieve and with Glasshouse?
I think I was surprised with how quickly they were able to bifurcate their businesses. I think that obviously there was a lot of planning going on behind the scenes to make that happen so quickly. I think that's the part that surprised me. I was expecting, we would have gotten full Schedule 3 for the whole industry, that we would have seen that speed of people going to the public markets, but the ability to bifurcate their businesses and take it to the public markets was pretty impressive. And I think it's a good sign for the industry that, to your point, that other folks that participate in financial services are now starting to come to the table and have these conversations. And so that will only grow as we get further information from the administration on where we're going on full reschedule.
Yeah, it's been it's been a wild ride, obviously, but it also seems like there's a lot is going to happen between, today, what is this, August 5th, and even Labor Day, and then Labor Day to the midterm elections, and then the midterm elections to January with new Congress. Like, I mean, it's trite to say that there's never a dull moment, but we actually know that the next several months there will be no dull moments because there are these sort of pivotal things that are about to happen, which is why we like to have a banker on call.
We also are going to have this, as you mentioned, from the election to the new Congress, we're going to have sort of a lame duck Congress. We already know some members are leaving because they've lost their primaries. And so it will be interesting to see what kind of horse trading is willing to go on if you're not worried about re-election.
Right.
And so there could be some interesting things that happen in the last 2 months of the year.
Yeah, I do recall, I wasn't in this role, but a previous role in a lame duck session where we had a webinar, it wasn't you, we had a webinar or a conversation with a congressman who thought safe banking was going to happen. And I swear it was 4 years ago in a lame duck session of Congress. Oh, I think it's going to happen over the next 3 weeks. There's a push there. So while a lot is going to happen, I'm not holding my breath for any of it to happen because I can't hold my breath that long, but I do think there are going to be some really interesting things happening, between now and the end of the year that will have major and long-term implications for operators, for financial institutions, and for the industry as a whole. So we look forward to having you on call. Another call to action. Make sure you take the survey. The link is in the show notes. And Tony, we always appreciate you having you on, and we look forward to connecting with you as some of these dominoes drop, I guess.
Absolutely. Well, Jay, great to talk to you as always. Enjoy what's left of summer and look forward to connecting with you soon.
Appreciate that. Thanks, Tony.
Talk to you soon.